Good day, everyone. This is Patrick from EasyFX Code Training System, and it's Saturday, the 6th of February, 2021. And it's the weekly analysis for the Euro, the cable, and the Aussie dollar for the second week of February. And let's begin with the Euro. And after consolidating in the symmetrical triangle, it has finally fallen off right on the first day of the week and on the first day of the month. So fell through below the daily 55 as well, and hit the 120 support level, and on Thursday fell through it together with the cable as well, sterling pound. But then on Friday managed a strong recovery and engulfed the Thursday's fall. This was due to poor, worse than expected non-farm payroll report from the US. So this was a saving grace for the euro, and as with other major pairs as well. It did head towards the weekly S3 level, just above 119.44 before rebounding. So we'll see how much it can recover. It has already fallen from the 121 level right at the lower trend line of the triangle. So we'll see if it's able to recover back above the daily 55 EMA. That's just above 120, 70 or 80 level. And it could just consolidate next week. Looks like 120 support will still be key, and resistance is at 121. And there's no major news from the Eurozone as well for this week. So it's likely going to depend a lot on the US dollar, as it has been for the last few weeks, as the dollar attempts to recover. Let's take a look at the US dollar index, and there's a daily time frame where you can see that it did break through the symmetrical triangle, break through the daily 55, and then continued higher till Thursday until the non-farm payroll report, and it has fallen back towards the daily 55 EMA. So that's that put a stop to its progress, and it was on its way to attempt to test the previous swing low that I mentioned before, and it has been finding its way, climbing back up and finding support from the 90 level recently, just a couple of weeks ago, and climb back up to break through the daily 55. So now we'll see whether the support is, looks like this will be a key support level at the 90.56 level, and whether it's going to consolidate until it gathers momentum again to attempt to break out higher. If it does comes back to test the 100 fib, it's swing low, then if there's a rejection, and that's going to be a major blow to the US dollar, and there could be a resumption of its bearish move. All right, this is the longer term weekly time frame. So at the moment, there's some reprieve, but we'll see how far it can recover. All right, let's move on to the cable. And last week's big news was the Bank of England's rate decision. And as expected, there was no change, and also no change in the number of votes to remain unchanged. And initially it fell before the news, but managed to find support and climb back up above 136. And on the Friday, it punched through the 137 thanks to the US dollar weakening. So that was a strong recovery from the Thursday's bounce. And it could resume to retest the, not retest, but actually to test the 138. That was the initial resistance level at the 162.5 extension. So we'll see whether this time it's able to get there. Just to move back down to the 4-hour time frame. So once it fell out from the lower trend line of the ascending wedge, it fell towards the 136 level and found support at the 4-hour 200 EMA. And once the it fell before the news, before the Bank of England's decision, and then once the news came up, it found support and rebounded. So classic case of, in this case, selling the news first, or selling the rumor, and then buying the news. The opposite of the buy the rumor, sell the news case. And then continued to come back up to retest the lower trend line. So this week, there could be just consolidation until a clear direction, whether it's going to resume its bearish pullback or retracement, or whether it's going to test the 138 level. All right, so that's the key resistance there. So for now, it has punched through 137, so I mark this as support again. And this week, there's only one key news of note from the UK with the prelim GDP figure. All right, and let's take a look at the Aussie dollar. The RBA didn't make any change, except they did announce a second round of bond buying. So that initially weakened the Aussie dollar before it managed to recover and finally made a higher high with a double bottom, almost a inverse head and shoulders here. We'll see if it's able to break out higher and continue up towards the retest the 0.77 level. All right, let's go back to the daily time frame, and whether it is able to climb back up above this lower trend line of the triangle. So for now, this is at the 162 fib. That's a key resistance level where the weekly pivot was as well last week. So if that holds, then there's a possibility that it could continue to climb up higher. But for now, support is at the 138 fib, below the 0.76 round figure. See whether it is extended upper trend line may prevent the a further bullish move. So there's a clear support from just below 0.76. Now resistance is probably around the 0.7750 level. So this area is going to be a strong resistance area. No major news as well from Australia. So a lot will depend on the US dollar movement. All right. So do check out my other videos on spot gold and dollar yen, and have a safe week and a good trading week as well. And cheers for now.